I'm Chimama Mangazi with Business Time on Times. It is a magazine program where we bring you business and economic news stories making headlines in the country. In the program today, economic experts emphasize the need to strategize on what commodities to import amid lean Forex reserves. Also in the program, we engage Malawi Stock Exchange Operations Manager on performance of the market in the just ended year. We have these and other stories. Stay tuned. Hello and welcome. Economic experts have emphasized the need to strategize on what goods and commodities the country should import amid lean Forex reserves. A weekly financial market developments report by the Reserve Bank of Malawi indicates that the gross official reserves increased by $12.2 million to close the week ending December 31st at $429.2 million. It represents 1.72 months of imports against the 3 months threshold. We have more in this report.
The report shows that activity in the foreign exchange retail market significantly dropped during the review period, being the climax of the festive season, which is characterized by holidays. Authorized dealer banks, ADBs, purchased a total of $8.13 million United States dollars from their customers compared to $32.98 million United States dollars recorded during the preceding week. On the demand side, ADBs sold a total of $7.60 million United States dollars compared to $29.26 million United States dollars recorded during the preceding week. But could the solution be pushing the reserves upwards? A question for Malawi University of Business and Applied Sciences-based economist Bechani Chereni.
90% of what we use is imported. A lot of it. We are importing commodities. We are importing pretty much everything. Everything from offices to homes to everywhere. We are importing services. So if our import cover is low, it means that the exchange rate is going to deteriorate. That's what you normally call depreciation. A depreciation of the exchange rate is going to translate into the prices of those commodities going up, which means that many people's welfare is going to be jeopardized. So people are going to fail to purchase the commodities which should actually sustain their livelihood, and that will become to be a problem. Fuel prices are going to go up if the import cover is going to continue to go down.
Economist Colin Kalua weighs in his views.
In this case where you're going towards a lean period like this, in the past what used to happen is you have to ration the foreign exchange. Some other commodities that we import from outside, should be actually under scrutiny, in fact that we don't waste that forex that we have. That one should be left out for essential services like importation of drugs, importation of fuel, and other essential services for the country to run. It's unfortunate that probably within any period in January or February, we're going to have that duty-free week, which means it will be a loss of revenue as well.
The country's Forex reserves have remained low, averaging 1.6 months of import cover against a 3 months threshold.
The Malawi Stock Exchange has showed signs of recovery from the impact of the COVID pandemic experienced in 2020 when it registered a positive return on index of 40.05% in 2021. This represents 32.97 percentage change increase when compared to 7.08% return on index recorded in the preceding year. I engaged Malawi Stock Exchange Operations Manager Kelin Kanyangala.
I would say that the market performance was really good. If you saw the return on index that was registered in 2021, it was quite significant at 40%. And if you compare with the previous year, you find that it is a significant jump because in 2020 rather, we had registered a return of 7.08%. And you might also be aware that even looking at Africa as a continent, you find that the Malawi Stock Exchange was the third best performing stock exchange in the continent. So the performance was really good. Looking at the individual companies, we had 12 companies that registered price gains, despite 4 that registered price declines. And if you're looking at the companies that registered those gains, you find that the best performing stock had registered a capital gain of over 270%. While on the other side, for those that lost, the drop was around 15% roughly. So you find that the range for the positives was really good, and also even the numbers that registered price gains was actually more than those that registered price declines. In terms of the volumes, there was a slight decline. You find that in 2021 we had around 1.3 billion shares that were transacted, compared to 1.6 billion shares. So there are quite a number of reasons, but I think what we can point to was that in 2021 we didn't have any equity listings. But if you compare with 2020, we had 2, that was Airtel and FDH Bank. And so you find that whenever there's an equity listing, there's a bit of activity that happens in that year. And so that attributed to the drop in the activity as well. On the debt market, there were also some developments. You know that we have a debt platform that was introduced in 2010. But since 2010, there wasn't any activity on the secondary market, despite listing a number of debt securities. But in 2021, we found that there was the first 2 trades that were registered, and that was on the securities that were issued by MyBank's banking securities. So it was quite a good year in terms of the performance as well as the developments in the market.
So as you put it, we see the traded volumes and the traded value decrease, but still the Malawi All Share Index rise. What exactly is happening here?
So when you're looking at the activity in terms of the volume as well as the value, and also comparing with the return, those are 2 different indicators. So if you're looking at the return, you're looking at the performance in terms of the movement of the prices of the securities that are listed. While if you're looking at the volume as well as the traded value, you're just looking at the quantity and value of those particular securities. So those do not necessarily go in one direction. They can go in different directions or in the same direction, but there isn't that much of a relation in terms of if there's the better performance in terms of the return, then there has to be a related improvement in the volume. It's not really that way. So there are 2 different indicators.
So 40.5% in 2021 against 7% in 2020. Mainly we had stories about COVID impacting listed companies. Should we say that the listed companies have gone back to pre-COVID levels, the performance, to reflect on this massive performance in 2021?
I would say that the performance was a reflection of at least the economy opening up. Because if you're looking at the performance, we're comparing with 2020. So at the end of 2020 and then comparing with the end of 2021, what was the movement in the share prices there? So you found that in 2020 there were some declines in the counters, even though some counters were a bit resilient in terms of the price movements. But we saw that most of the companies were affected if you look at the performance of 2020. So you find that overall the return was at 7.08%. If not for COVID, that return was supposed to be higher. And so when we moved into 2021, yes, there was that impact of COVID, but I think over the course of the year, we saw that there was a bit of improvement in the economy overall, and that was also reflected in the way the companies performed. So if you compare 2020 to 2021, you find that there was quite a significant improvement in how the companies performed, and that was reflected in the price movements.
Were there any challenges that the market experienced in the year?
Yes, the challenges were there, one of them being the COVID situation. In as much as the activity was also due to issues of there not being any equity listings, but we've also noted that since the emergence of the COVID pandemic, there's been a slowdown in terms of activity. As you know, people are not necessarily weren't able to maybe invest when the money that they had, maybe they were committing it to making sure they're remaining healthy, and also other issues in their household. Some were retrenched, some lost their businesses, so it was difficult to put money on the market to invest.
This is Business Time on Times. We will be right back after the break. Welcome back. The Malawi Confederation of Chambers of Commerce and Industry, MCCCI, has asked the National Economic Empowerment Fund to start supporting establishment of local industries to enhance industrial growth. The chamber holds that in its current form, the NIF is developing foreign industries by offering loans to people in businesses that import products made in other countries. Justin Kweu has more in this report.
National Economic Empowerment Fund, NIF, is a government entity which loans out to individuals and groups for different enterprise engagements. The fund was established to help people who want to engage in business access affordable finance. While each year the demand for loans surge, MCCCI President James Chimwaza is of the view that the fund should focus on groups that will help in improving the manufacturing sector.
When we looked at the performance in the economy, we noticed that whilst the inflation went up to 9.1%, the credit contribution showed no growth into investment into manufacturing by government, or limited growth in agriculture. The biggest growth was in the community, social, and personal services, which is consumption. That, if it goes on, it brings more challenges in 2022. Also, when we look at government expenditure, there was very little in development expenditure. The bulk of the expenditure was in the current budget or consumption expenditure. Now, if those two persist again in 2022, it means there will be further shrinkage of the economy. So it is threatening. It looks not so promising. The only light at the end of the tunnel is the strategy we have, the Malawi 2063 and the 10-year program that we are starting. Now, for that program of key interest to the private sector,
Chereni agreed with Chimwaza in a separate interview, adding that the way the fund is now, it cannot improve the manufacturing sector. He adds that unless revamped, the fund will continue helping other countries develop while depleting import cover for Malawi.
Look, this is a huge subject of concern for many economies and many industrialists in particular. It is a very huge problem, and we need to address it from the policy level and from the action level. You see, first of all, banks in Malawi are happy to lend money to the government because government is pretty much a risk-free borrower. But what does the government do with the money? It's ORT, paying salaries, and that's what the government does with that money when it borrows. Things that are not necessarily going to induce economic growth and development at the end of the day. So that is a huge problem. It is not attractive for the financial industry, the financing sector, to lend out for the long-term resources to the private sector. This is a huge problem. You will find that many people are operating on short-term financing, overdrafts, for example. You've got industries that are operating on overdrafts, month in, month out, month in, month out. That is dangerous. We cannot do that. The second thing is that here in Malawi and many parts of the sub-Saharan African region, you realize that people do not finance ideas. So even if you have a very, very brilliant idea which is going to revolutionize a particular industry or a particular way of doing things, you find that bankers are not willing to finance that. And that becomes to be a problem. As a result, you find that most of the loans advanced towards the private sector are loans that are trading in nature.
Replying to the suggestions, NIF spokesperson Whiton Kapasule said their current license mandates them to do what they are doing.
We are licensed as a microfinance institution. Now, as a microfinance institution, we have got certain limitations that are stipulated by the Microfinance Services Act that was gazetted by the Reserve Bank in 2010. Even if you consider the Financial Services Act, there are limitations. How much can we disburse? As an institution currently, because of this license, we are limited to disburse to the minimum, to a maximum of about 50 million kwacha. More than that, we cannot. Now, as a microfinance institution, are we able to finance those ideas that people are propagating for? Can we finance ideas that are looking for about 500 million Malawi kwacha? According to the current licensing that we have, we cannot be able to do that. So it's a very interesting suggestions to hear from those gurus that are those industry gurus that are suggesting for such a revamping of the organization. But that will come into realization once we change the certificate. Should we change to something maybe a microfinance bank? Probably, maybe I read one of the articles that somebody said maybe we should look at coming up with the Malawi Enterprise Bank, because the microfinance services license that we have is limiting us in so many issues. But it would be nice to hear from such proponents and maybe look at how we can come to the table and ensure that we take the ideas on board, because our core, the essence of the essence of our existence to ensure that we should help Malawians.
Malawi's export base remains lean, highly dependent on exporting raw agricultural goods.
The Ministry of Agriculture has indicated that distribution of farm inputs under the Affordable Input Program has reached 50%. This follows a recent interest on the market by some contracted companies that have helped to move some 80,000 metric tons of inputs. Justin Kweu reports.
As of 10 January this year, 2.1 million bags of NPK fertilizer has been distributed, representing 57.4%. 1.6 million bags of urea fertilizer have been distributed, representing 43.3%. In total, 3.7 million bags of fertilizer have been distributed, representing 50.3%. 2.2 million packs of seed have been distributed, representing 59.4%. And 12,471 goats have been distributed, representing 20.8%. The Ministry of Agriculture has attributed the progress to the start of sale by 3 companies, which the ministry say were given bigger tonnages of inputs to supply. The ministry's public relations officer, Gresham Lungu, disclosed that apart from that, government has purchased 80,000 metric tons of fertilizer, whose dispatching is already in progress. According to Lungu, the suppliers are Chipiku, Paramount Commodities, and AfriVenture, whose progress in selling the inputs is fast compared to how the distribution was moving in the past. The ministry believes that with the coming in of the 3 companies, selling of inputs has highly picked up across the country, a development which will result in food security, according to Lungu. Even though the Ministry of Agriculture Public Relations Officer could not tell the 3 companies' share to the whole AIP, he explained that AfriVenture has so far sold more than 4,836 metric tons. Paramount Commodities and Chipiku stores have so far sold over 2,000 metric tons each. Farmers Union of Malawi President Frighton Njolomole applauded the development, adding that it was long overdue as the rains have already begun. Njolomole, however, said government should make sure that dispatching happens quickly and reaches to all corners of the country. He added that farmers are happy with these developments, but they want to ask government to make sure that dispatching of the fertilizer they have bought should be quick because the rains, though late, they are here. Agriculturalists and farmers have described this year's AIP as the worst since the program began, as it has been marred with hitches, causing a failure to hit 50% of distribution by December last year. The Tonse Alliance-led government increased the number of AIP beneficiaries from 900,000 households to 3.7 million households, which government says has improved food security in the first year of its implementation in the 2020-2021 farming season.
Well, with that story, we've come to the end of today's edition of Business Time here on Times. It is a magazine program where we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, I am Chimwemwe Mangazi. Always remember, if it doesn't make money, it doesn't make sense. Bye for now.